Okay, so I decided to do this video because trying to show it in pictures is, well, it's too much. It's too much to write, and I'm pretty sure that most of the idea would not be understandable through it. So basically, this is these are two indicators that I've added, and they form a system that I stole from an interview with Tom Baso. It's a guy from Market Wizards, and I watched that interview. He talked a bit about the system. He explained the basics in a way. So I decided to steal the idea, try to see what the system can do. And I like the idea because these two indicators are virtually anonymous. Like I have never seen people use them. They were used in the past by the turtle traders. Whoever knows. And now they're not widespread at all. And so I thought that there might be an edge in using them. Now, I think each indicator by its own is useless because it doesn't give you good signals, but together, blended together, they actually give you more information that you can work with and more trades and more stop and more like clear stop losses, which is why I like the clear stop loss when you know where when you're wrong. So the blue one with the orange line in the middle is called Donchian channel, and it's a trend following channel. And the red channel with the yellow line in the middle is Keltner channel, which is basically a volatility channel. It's same as Bollinger Bands, but it's less sensitive to volatility, which makes it better actually in a volatile market because then it will give you less false signals. Yes, it will react slower, but then it will react on signals that are actually good, signals that are actually worth following. So, what's the point? For example, the main point is using um, the Donchen channel as a kind of confirmation for a trend, which is what we have right now is a bull market, so the trend is higher. And the Keltner channel is used to basically kind of control the entire trade. So, um, well, I'll give you examples a bit later, but the whole idea is to see that the trade doesn't get too overextended, and also to see that where a reversal to one of the sides can happen. Now, um, the Donchian channel, usually the way it's presented is that it can be used as both as a trend following tool and both as a reversal tool. So I think it's a bit tough to use it as a reversal tool because it's not really like that of a great indicator for reversals. But basically, you see when prices, this is for example a Donchian using 50 period, which I know that Tom Besa also uses. So basically, the Donchian is just marking the highest and lowest price. So, for example, if it's trending higher, it will always mark the highest price it closed at, the highest current price. And then the lower channel is a sort of a potential downside target if it were to go there. And then when the price gets to the down, so for example, let's say if it rolled over here, right? So the whole idea would be that a trend follower would attempt to buy uh, at this line, which is flat. Okay. And of course, if it moved down and then the line would curve down and fall too, then the trend follower would probably be cautious to buy that particular dip. It would wait for maybe other signals. And that's a bit why we also have the Keltner channel. Okay. But I think that the true value is being able to play the Donchian channel to its full extent. That means that using all the signals, not only trading one strategy, only one variation, but trading all of them. So, as an example, okay, um, of course, I'll talk about it after the fact, but it's just an example of a potential signal that could have been given. So, what happens is as we approach this low, okay, which was Friday, August 18, the Donchian channel the very next day already starts flattening out. Okay. So what's good about this is that it gives us a stop loss. An immediate stop loss is basically below this flat line of the channel. And the reason is because if you're a trend follower and you're bearish, for example, then you would actually add to your position as the price breaches the channel down. So for example, the same as it happened here on the bullish side, where you see every time it kind of pushes the Donchian up, it's just a further confirmation of how strong the trend is. So let's say if somebody flipped bearish from the trend followers here, they'd actually try to add more positions as the price goes down, if not even actually open a new position here and try to swing it to the downside. But the probably most trend followers won't do that because other indicators still show them that we are in a bull market, and that's why they will probably be looking to buy here. Okay, that's actually one of the reasons why I do believe that they indeed tried to buy this dip and they succeeded in a way. And another use, for example, we could have for the Donchian, okay, is we could actually have attempted to buy a dip here and try to sell it at the orange line. So the orange line is sort of a check on the short-term movements. So as long, for example, as we remain below the orange line, then prices are more likely to move down. The more we remain above the orange line, prices are likely to move up. And you can actually see that basically since March we've remained all the time on the S&P 500. Of course, Nasdaq is way beyond that, right? But even the S&P 500 never really crossed below the middle line of the Donchian, basically confirming that the trade is still on. The bullishness is not out of the market. Now it's also a good thing because, as you see, this is the candle of today, which is Tuesday, the 29th of August. And it's a good check because what happens is we've breached this line today. So if you were actually a trend follower using the system and you were wary to buy dips because you don't know, maybe the trend can actually switch to the downside, that's actually the first kind of conservative signal to buy as long, buy at the end of the day, as long as the price doesn't fall below the middle of the Donchian channel, then it's likely to head back higher again and try to make a higher high in the pattern. So this is the Donchian itself, right? And actually there will be trend followers here at the highs where if we breach them, they will actually use this idea to actually long at the highs for the breakout to the upside sort of. So that's all good because it's actually showing us the more confirmation we have, the more signals these trend followers. I know that they're not really using it, but it kind of is simulating other systems that they're using, which have kind of similar ideas behind them. And the more signals we get, the more bullish and buying signals we get, the higher the likelihood that we'll actually make a higher high in the pattern, or at least try to challenge the highs. So for example, if you actually bought the bottom, this is a very good sign for you because we had breached the middle of the Donchian channel, meaning that there are much more chances of an upside than downside. Um, about playing this line as a support or resistance, I would say that you have to consider it as long as the uptrend remains intact, which it is. As long as this is a sort of a bull market, I would not look to play this line as resistance ever, because that's what other people won't be doing. The buyers will not be playing this line as a resistance. They'll be playing it as a support and as a confirmation. And because it's a trend following tool and the trend is up, you have to use this tool as the trend followers use it. Now about the Keltner channel. So the Keltner is the red one with the yellow line in between, in the middle. So it works kind of like, again, as I've said, like a Bollinger Band, but it's less sensitive. So as you see, prices here can go above it, which is actually a bit bullish, believe it or not. But what's good about it is it kinda is here for just a few simple purposes. But for example, one of the purposes is to try and show you kind of extremes in the market. So for example, on this day, Friday, which actually was the bottom, right? Using only the Donchian channel, you would not really have a good idea of a really good idea of risk reward, in the sense that you would not know if this price is extreme and it should be bought or not. But the fact that we had reached, the bottom of the Keltner channel is actually another bullish confirmation signal that day, the end of that day, the close should be bought. And again, the stop is pretty much below when you break the Donchian channel to the downside. Now, why do I say that this is more of a believable signal? Although on the upside, it kept breaking it higher. On multiple occasions, there was a squeeze, and really the price kept kind of going above the Keltner. What we have to understand is the Keltner is also some kind of a form of, a trend following indicator. The Bollinger, for example, is more sensitive to volatility because the Bollinger essentially tries to show you kind of picks up in volatility, right? When you have a calm market, when you have a normal market, normal bull market, the market is not moving crazy percentages all the time, just some of the time. So um, the Bollinger Band is basically more sensitive to volatility because it tries to take these outlier days and see if they bring you to extremes. The Keltner doesn't really do that. It tries to use basically average true range also to kind of make it a bit more, you know, a bit more tame, less volatile. Now, when we are in an uptrend, okay, when prices are trending higher, it is much more likely that downside volatility, which reaches extreme, okay, which is about here, okay, or let's say reaches a certain extreme, it's much more likely that that downside volatility will be bought because we're in an uptrend, right? But and also because we are in an uptrend, it's much more likely that the upside volatility will not really be resisted. Okay? That means that the upside volatility, the potential for upside volatility is higher than for downside volatility. Now, of course, that assumes that the trend remains bullish, but so far we don't really have any evidence that it's not. What you can see, for example, though, in the Keltner channel, is the middle line is actually more useful than for the Donchian. It actually, a lot of times, it acts as a kind of a moving average and sometimes even good support. As you see, it actually is kind of rebound. The market is rebounding from this line, and that's what's great about it, because it actually can sort of fulfill the role of another confirmation, another moving average. And again, in an uptrend, you would look to try and trade it as form of support and not a form of resistance. So because today, 29th of August, we breached both of these lines, it only adds up, okay, to how more likely this move is to continue higher. Now again, there's no guarantees in the market, right? But it increases the odds significantly that the move will move higher. Now let's say if I was a trend follower and I wouldn't try to play reversals, I would only use the signals, then I'd actually buy at the end of today, and my stop would be if it actually closes below the two middle lines. Because if it closes below the two middle lines, it basically, again, kind of gets the ball back into the hands of the bears, where now there's more likelihood that the path will continue down, even if eventually, it goes higher again. But in the short term, the path down is more likely to continue if we close below this. So for example, if we get tomorrow, we get a full reversal of this candle, which is again unlikely, I guess, but it can happen, right? But if we get a full reversal of this candle, or maybe even not tomorrow, maybe next week, and close below these averages, then that's basically the stop loss for, let's say, a trend follower, right? That's where you'll be looking for perhaps a lower low to buy and try to speculate that the trend's still bullish and it's going to return to the highs. So that's basically kind of the basics of it. The reason why I think the system is cool is because it gives you, like, let's say if you play the reversals, it gives you kind of defined stop losses, and it also gives you defined, risk rewards. That means that you know that you can hold the trade up until the middle of the Donchian channel, or you know that you can actually, well, that's more speculative, but the more speculative is basically, well, the market goes higher, right? But you at least get the trade till the middle, till the close above or near the Donchian channel middle, or the middle of the Keltner, which also could be possible, if you really, a new downtrend began. By the way, as you see here, is that when actually the market was bearish, it hugged the Keltner, but actually the middle of the Keltner channel acted in the opposite way. It acted here on the upside. It actually acted as a sort of a resistance and confirmation. Every day we closed below it, it was a confirmation that the bearish forces are still in. There's still downside volatility in the market. Um, and I tried also, like, what I think is cool about the system is that it actually could give you this trade where, you can long today, and the stop loss is basically almost this entire candle below the moving averages, which sometimes is a bit of a big stop loss because we had like a big of a bit of a big candle today. But I like it because I think it can kind of solve the problem of entering trends in their middle, because I think that the biggest problem with entering trends in the middle is you don't really know where the stop loss is, and you don't really know how to determine if the trend really changed against you, unfortunately, or if it's just, for example, if it went against you, is it just a dip and the trend higher will continue? So I think that um, these middle lines combined, both of the Keltner and the Donchian, are sort of are a good indication, are a good place to try and enter back into the upside here. Okay, and because the stop loss is defined, so by the way, it's defined pretty well, because what happens if actually you long, the trade works for some time, but then it sharply comes down, closes below. Now it closes, let's say, just slightly below where you bought. So let's say in a week we close in these levels. Let's say this is the level we close like next week. But it won't be really that much below your buy point, but because the averages have already moved up, if it actually closes below the averages, it would actually signal you that you probably should exit that trade because now the downside volatility is more probable. Downside is more probable in general. So that's why I like this. And I kind of combined it. I combined it with an indicator I stole from Alessio, the options guy. So this is basically a volume indicator, and it's kind of blended with a sort of an RSI that tries to kind of measure. Um, it's sort of an RSI that also uses volume as a kind of a input. And I like this indicator because it gives you an early signal usually. So when you see it really kind of reaching extremes, I mean, it should be like extremes relative to kind of the past, the recent past, right? When it reaches extremes, then usually what happens is sometimes it could be the bottom itself that day, but usually what it does is it actually reaches extreme and then it starts rebounding, let's say to the from the downside, or let's say let's use one example which is the upside. So here it reaches extremes in it reaches pretty much an extreme at 4,500. Okay, and even though the price goes higher, we see that the red histogram is actually spiking a bit. Not every day, but it has these spikes. So what this indicator is basically seeing is that there's more selling coming in at these levels. And it starts trending down. And even though we still move up in price and we make a higher high, this indicator is showing a divergence. And where you should actually short is on these divergences. But most importantly is when it passes the middle line, the zero line, that's where usually you get like the move confirmed as well. So for example, if you use this indicator alone, you'd actually short on this red day on its close. And the stop would probably be a new high or something like that, right? But if you actually held it to a new extreme, okay, the new extreme was actually the low currently. So you'd actually have a trade worth almost 3.33% of the SPX. And that's pretty cool. But I like to use it not as a trading signal, but more as a signal overall of of what happens. So, for example, I knew that would probably pump higher. Okay, that the upside is more probable, not only because of these guys, not only because I knew that one candle can close us above the middles, but also because it had bottomed already here. And even though we made almost a double bottom on the price, we have a divergence here. And actually, this day, okay, which was Friday last week, we reached the zero line and we surpassed it. And once we surpass the middle line, the true move, the kind of the more explosive part of the move starts. So that's why I also like this indicator. And that's what I knew that we probably should have at least one explosive move to the upside this week. Okay. Um, as you see, it kind of starts reaching a bit of an extreme price. So we'll have to see what happens. What it actually means is that, again, looking at all the other examples, right? It doesn't mean it can turn down, but it means that it can go higher, consolidate a bit, and then go higher again, maybe even making a higher high in the pattern. And then it would show you pretty big divergence. And once it crosses the zero line, you pretty much have kind of a confirmation that the big bullish move, the big bearish move, okay, to the downside, be it another correction or be it like a full reversal, I don't know. You will have a confirmation once it crosses the zero line that the bearish move is it's gonna begin now. Like the big flash down, the big downside, it's probably gonna begin now. So it's also an indicator to use with all of them. It actually improves your odds to pick a sort of a bottom, right? To pick a bottom using all of these free indicators, and then using the other two to try and ride it as high as you can, on the side of the trend. So that's pretty much the presentation of these indicators.